Hello everyone, my name is Matthew Frailey, founder of BreakpointTrades.com. Since 2003, we've been bringing advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms, such as our 21 mean reversion systems, and of course our famous KISS systems, which you just have to check out. Again, KISS systems, when you go to these tables, you can follow these, look at these awesome gains, and just to show you the example. So again, this is generally what the KISS system does. It has you long only, keeps you in uptrends. It allows you to basically participate in market uptrends and prevents you from going through market corrections and bear markets, just like you see here on the S&P. It was long. It got out only 4% off the highs from that 2020 high. Market had a 35% correction. It got back in at the lows. You can see that it started setting its smart trailing stops all along the way. Got out once there, got back in, got out. That's an example of what the system is doing. And, here's an example of one of the KISS systems on the STS tables, CrowdStrike. Now, this was taken the other day. System went long on August 21st. Right here, set its initial smart trailing stop at 140.50, has moved it up 21 consecutive times. Trade is currently up 88%. This trade is guaranteed a large winner no matter what happens. So that's an example of what the KISS systems can do for you. Nothing out there like it. It's kind of like having life insurance for your portfolio, essentially. You're able to capture the market uptrends and not go through the bear markets and strong corrections. That's what it excels at. Okay, so let's go and get back to this newsletter. Let me go and start the recording here. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, January 24th newsletter. By the way, Steve Nelson's going out of town tomorrow morning, so I'll be doing the newsletter on Thursday and of course the weekend. This is the newsletter. This one's divided into 6 major sections. Again, the same general formulas I usually keep. We'll have our opening discussion. We talk a little bit about the systems. We do a top-down approach on the major indexes, such as the S&P 500, NASDAQ, Qs, the Dow. We'll look at some of our custom indicators, see if some warning signs are showing up there. We'll look at the US dollar, commodities, precious metals, GDX, and follow up with trade ideas. With tomorrow being Thursday, we have the initial jobless claims. Friday is the PCE inflation data, so that's a big one. Right? Also, a lot of S&P 500 companies are reporting. And let's go ahead and get started here. So item number 2 shows the index sector table, what transpired today and this week. So today was a bifurcation. You can see the Dow and the Russell were down, while the NASDAQ and S&P were up. For the week, everything is up except for the Dow. All right, again, no real big gains here. S&P is up 0.6% for the week. NASDAQ's up about just over 1%. And despite the 0.8% pullback in the Russell today, it's still up 1% for the week. As far as the sectors here, we follow 21 of them. And if you look here, just over half the sectors were down today. So definitely matches the bifurcation you'll see here. Again, a lot of weakness in retail, consumer discretionary, industrials, metals and mining. Just the strength today primarily was in the energy area. Oil services, XLE. Remember the other day I put out a long idea on ExxonMobil, and it's had a nice trade from that trigger. Banks were up, financials, transports were down. Again, the issue we're seeing on the market is we do have divergences now on these daily charts with the MACD. And so we could be setting up, once this current uptrend ends, we could see a pretty decent ABC correction. As far as the currencies, US dollar down 0.3% today. It's flat for the week. Cryptos were mixed. They're down nicely for the week, though. As you know, we had that buy the rumor, sell the news over a week ago, where they had a pretty obvious top that was just textbook, super easy, and the Bitcoin crypto stocks got absolutely destroyed during that. Commodities here, Look at this. This was the standout today. All these commodities were up. The index was up 0.86%. It's up 1.8% for the week. Crude oil up 1%. It's up 2.5% for the week. Natural gas bounced back, up 4.4% today. Copper up 2.4% today. Corn, wheat, coffee, agriculture, all these up. Precious metals, well, same old, same old. This area just cannot get out of bed. So gold down 0.8% today, basically wiping out its gains for the week. GDX, the miners, down 1.9%. So they're flat essentially for the week. Again, you want to see the stocks leading, and they're not leading. They have not been leading. Steve commented last night that said, be careful about this area. That rally is likely to fail, and that's what happened. As far as the bonds and interest rates, the 10-year, 30-year were up nicely today. Next, item number 3 shows the economic news calendar. Like I said, being Thursday, tomorrow we have the initial jobless claims, GDP, new home sales, natural gas inventories, and of course Friday is the big one, is the PCE prices. Next, image number 4. This shows you a daily snapshot of the 5 key major indexes. Dow at the top. Again, remember I commented on Monday, a lot of these were quite overbought. The upper Bollinger Bands are above their upper Bollinger Bands. Well, now pulling back. And you can see the black candles, the dojis on a lot of these. And we'll see if that eventually leads to a pullback here. Next, number 5, here's the Dow. Again, slightly pulling back. Again, you know, the trend is strong. It is up. We're still above the 9 EMA and the 20. But again, as I stated, that new high has set up a pretty good MACD divergence here. So, and you can see how wide your MA ribbon is. Remember, these ribbons, kind of like mean reversion, you only get so wide before they revert back. And so it's been pretty wide here. And that's eventually going to need to be worked off. Eventually, if the Dow, when it loses the 9 and 20 here, it'll almost certainly test this 20-day or 50-day moving average. Next, chart number 6, here's the weekly chart of the S&P. So for the week, again, up 0.6%. Remember this channel we were showing last week and on the weekend? Notice price tagged that upper channel line, finding resistance there. Okay, we have some divergence on that 5-length RSI, a little bit on the CCI here. So it is something to watch. Again, because we did take out those all-time highs, that was a magnet. You know, any time up in this area could be an area for the market to have some sort of correction. But we did stall right at that resistance. Chart number 7, here's the daily chart of the S&P. Again, you can see the black candle doji today. And those are often a warning. When you go back and look at these charts, you can see a black candle here, here. Notice how a lot of these tend to occur at inflection points. So again, remember, I've been talking about the MACD. You know, with that nice new high in the S&P, MACD is severely lagging here. That is a negative divergence. Again, divergence is not a sell signal on its own, but it is something that you want to pay attention to. Next, chart number 8, here's the KISS system for the S&P. Again, no changes here. Current smart trailing stop is at 46.84. System went long back here on October 31st. Excellent entry with the initial stop. It's been able to raise it all that time. Again, the system's doing what it's supposed to do. If you went long back here, you're nicely profitable no matter what happens at this point. You know, if the market just wants to keep uptrending, doesn't have a pullback or correction, the system will simply continue to move the smart trailing stop higher and keep you in. That's the beauty of the system. You know, you don't have to guess on the market. You can just follow it. Next. Chart number 9. Again, I already showed this a few times, but this is just a nice idealized example of the KISS system. Showing back in the 2019-20 time frames where it was long. It allowed you to get off, hit your smart trailing stop there in February, only 4% off the highs. You've then avoided that 30% market correction, got you back into lows, set your stop, moved them up. And it's a good example because it shows you how the system got out there in June of 2020. Market only mainly had a sideways correction, and then it got right back in just a little over where it got out. So the system righted itself, Wasn't a big correction. It got back in. Next. Again, CRWD, this is right from the STS tables. I mean, again, you're not going to see trades like this every day, but this has been a live trade. The system went long on August 21st, raised its smart trailing stop 21 times. It's up over 88%. That's amazing. Again, you're not going to see that that often, but I have seen cases of this. I've seen times when the system has been able to raise its smart trailing stop 30 or 40 times even. So it does happen, and awesome example. Next, image number 11. Here's the 4 time frames we like to follow. First off, ATR is supporting all the time frames now: daily, half day, 130 minute, 78 minute. But one thing to note, on the half day, we got a DeMark 9 there, so that's notable, and we're pretty close to the ATR in the 78. Chart number 12, here's the half day chart. Again, remember we broke out from that ascending triangle, moved up nicely. We essentially hit the pattern measurement. So it is a logical area if it wants to have a pullback here. You have that divergence in place. This is your big long-term support now, obviously. Seems pretty far away now, doesn't it? Down there near 4,600. That's your big support. When the S&P and the market do finally put in a little fifth wave high, I'd expect a pullback at least back to that area. Chart number 13, here's the 60-minute chart. Just shows you the same thing, just on a 60-minute time frame. By the way, we had negative divergence on the MACD on this time frame. Chart number 14, 30-minute chart. And you can see the MACD divergence up there at today's highs. Again, market gapped up this morning, rallied, but then set up that divergence. Chart number 15, here's a 15-minute chart. One thing to be aware of, remember I talked about this on Monday, I commented that sideways consolidation, we favored that as a fourth wave. And that was right. That was a buying opportunity. Then we got another move up higher in a wave 5. And that was the time to take some good profits, guys. Remember, anytime you see 5 clear waves in any direction, you generally want to look for some sort of market reversal. But again, if you go back and listen to our newsletters on Monday and Tuesday, we talked about that being a fourth wave. So if it went long, you're going to get a nice pop on that. Chart number 16, here's a 10-minute chart. Shows that inverse head and shoulder pattern, which played out. This shows a potential wave 5, whether that's is completed yet or not, still remains to be seen. We gap up today, and we essentially just about filled that gap. So if you didn't take profits midday or whatever, you gave them back in the morning. Next, chart number 17, here's the triple Qs. Again, uptrend continues. Black candle doji here, so be aware of that. Again, you got support of these short-term moving averages. The MACD is still lagging here. Something to be aware of. We are still uptrending, but be aware of the dojis. Chart number 18, here's the KISS system for the triple Qs. Again, no new smart trailing stops. It's still at 404.60. System went long back there on October 31st. System's doing its job. Excellent. Next, image number 19. Here's the 4 time frames. One thing to note here, so we have the DeMark 9 on the half-day chart, just like on the S&P. On the daily, we have an end-of-bull cycle. So what that means is it's trying to guess that we have some sort of fifth wave high up here. Again, it doesn't mean that we reverse right here, but it is interesting. And these cycle indicators are pretty powerful indicators. Again, ATR is supporting all the time frames for now. Chart number 20, here's the 30-minute chart. And similar look to the S&P. Like I said, we popped this morning, set up that MACD divergence, and then gave back some gains in the afternoon. Chart number 21, here's a 15-minute chart. Here's another potential wave count. So this wave 5 could be a wave 5 of 3, and this is a wave 4 pullback. If that is the case, then you would favor one more move up in a wave to complete that wave 5 in parentheses. Again, it doesn't have to do that, but it is that is something that is possible. Now, if we do get that, that will be a big sell opportunity, okay? Because that will complete the nested 5-wave pattern. All right, so that does it for the major indexes. Let's go ahead and move on. Oh, actually, we still have the Russell here. So here's IWM. Big reversal today right at this trend line. Boom. Next, chart 23, here's the 60-minute chart. Remember I talked about that open gap? That was filled the other day. That was a magnet. We're pulling back now. Now we have another open gap down here that could also potentially be a magnet. All right, so that does it for the major indexes. Let's move on to some of our indicators. Chart 24, here's the VIX. VIX was up today a little bit, and the S&P was up. So that is notable when both the VIX and the S&P are up. So sometimes you have the reverse happen the next day, a down day. So be aware of that. Again, the vertical lines here represent the last VIX Bollinger Band buy signals when the VIX was above the upper Bollinger Bands and closed back inside. All those were excellent buy signals. Next, chart 25. Here's that 60-minute chart of the VIX I showed on Monday. Remember I talked about this open gap was a magnet, and that's what ended up happening. We filled that gap, and then we came down to this demand zone and rallied right off of it. These support and these demand zones and supply zones are very powerful. I see a lot of traders starting to use these, things like TradingView and stuff like that. It's very effective, very simple. Instead of just drawing one line, a zone, and very effective. Next. Chart 26, here's the percentage of stocks in the S&P 500 that are above their 20-day moving average. Remember, we had a divergence set up back here in just late December. We got a little pullback. As the S&P continues to rally to new highs, this is still severely lagging. I mean, look at the divergence here relative to that last move. So divergence continues to build. Chart 27, here's the NAMO and NIMO McClellan oscillators. Remember, they've been below zero all January while the indexes have rallied. That is a divergence setting up. Chart 28, here's the NAMO itself with the triple Qs below. Again, generally, when this is above zero, like here, you're uptrending. When it's below zero, you're downtrending. So you have this big divergence here set up where it has remained below zero this whole time while the Qs continue to go higher. So unless this gets back above zero, I think this is eventually going to play out and we'll get a market correction from that. Next, chart 29, here's XLK. I'm not going to look at a bunch of sectors tonight, just a couple of them. This is the technology. Spinning top doji candlestick. So we are getting quite extended. Next, chart 30, here's XLK on the 60-minute chart. Whenever I see something extended on the daily, I want to zoom down to a 60-minute time frame. And particularly look to see if I see a divergence with the MACD, and you have it here. So that confirms potentially that doji is a warning on the daily. Next, chart 31, here's oil services. They've had a nice rally this week. Energy's been moving up. Right now, this is in a nice clean downtrend channel. Some moving averages here to clear, as well as the downtrend channel line. Chart 32, here's the weekly bigger picture view. Also have the price by volume on here. Nice chart. I've had this drawn like for a year at least. A nice long uptrend trend line here, which we got pretty close to. We drew a downtrend line here to watch that matches that daily channel. But if it can break out of this over time, this could go up into this thin zone. Why is this a thin zone? Look at the volume, price by volume. Bars are super small there. That's extremely, this is like an air pocket. If price gets into here, it can move up through it quite easily. You can see all these areas in here. This is big, important price resistance and support because the volume by price is huge there. Next, chart 33, CVX, Chevron. Pointed this out the other day into a supply zone. So that's an example of a supply zone. And was a nice area to buy. And it still has moving averages to clear above. And thought I had ExxonMobil here. I think I got it down in the trade ideas. That's been an excellent trade. We'll cover that later on. So let's go ahead and move on. Chart 34, moving on to bonds. Here's high yield corporate, still in this coil pattern. High yield corporate has lagged the S&P, so let's take a look at that. Chart 35, here's the S&P versus high yield corporate. Again, you can see this big old divergence between the two. And that is important to watch because, again, you can see whenever the two move together, but whenever you have divergences like the one in October, that was a nice positive divergence, led to the rally. And the negative divergence there in July led to the correction. So while this divergence is in place, it's something you should pay attention to. Next. Moving on, chart 36, here's the 10-year treasury yield. Continues rallying up. You know, back in December, I thought it looked bottomed, and it did. And it's been moving higher since. Chart 37, TLT 20-year bonds. Again, bonds move opposite of rates. Moving down, here we have a nice downtrend line to watch. We're below the 50-day now. Moving on to commodities, chart 38, DBC, that's the index, up 0.86% today. Finally closing above the little downtrend line, right at the 50-day moving average. Chart 39, here's the monthly chart of DBC. I identified a bull market back in late 2020, early 2021. You can see how the moving average ribbon was pinched. That's when you get energies built up, you get your strong moves. And you can see over the last year and a half, while price has been consolidating, the moving average ribbon is now starting to pinch again. So it is definitely an interesting area to watch. Chart 40, here is crude oil. Still in this coil-like pattern. It's trying to break to the upside now. Chart 41, natural gas. Remember, natural gas had a big move up on that, cold front across the U.S., the big sell-off, and then yesterday was quite oversold with these dojis. Little pop today. Chart 42, copper. Big old rally today, up 2.4%. So that's a big move. Chart 43, DBA, agriculture. Remember, this started breaking out of this pattern last week. That was an area to go long, and it's been moving higher since. Chart 44, here's the weekly chart of DBA. I like this weekly chart. It is super bullish. I added to my position today, in fact. Looks like a big old weekly cup and handle. Okay, that plays out. This could go nicely higher for quite a while. Next, chart 45, following up in uranium. Kind of looked like a bull flag yesterday with that volume profile. It gapped up today and pulled back. It's still okay here if it kind of holds this area, but obviously off the highs today. Chart 46, there's uranium on the monthly time frame. Again, I'm long-term bullish. I've been bullish since late 2020. I've been bullish mid last year out of this coil break. I think eventually it could work up into this supply zone way up there in the 40s. Okay, it's going to take time. Remember, these are monthly candles, but I think it can happen over time. Chart 47, UEC, another uranium. Steve had it last night. Again, same thing as uranium. Was trying to pop out of that flag, pulling back today. We'll see what it does tomorrow. Next. Here's Bitcoin. That's the weekly chart. So far down 3.66% for the week. Again, absolute textbook reversal off that 61.8 fib 3 weeks ago. Chart 49, there's the daily chart. Again, remember that spike high a couple weeks ago on the buy the rumor, sell the news, or buy the rumor, sell the news. We had a huge MACD divergence on that push, and that played out. We warned about that. Chart 50, here's Bitcoin versus one of the crypto stocks, Mara. Again, you had a big divergence set up between the two. That was your other warning. The stocks tend to lead, they were lagging there. Let's look at Mara itself. So again, you can see the sharp correction it had from the December highs into this demand zone. It's bounced off of it. My concern is that the 200-day moving average is so damn close. It may just be like a magnet, and it needs to tag that area. Chart 52, here's the 60-minute chart. Again, it's still possible you have a little fifth wave low here, but it needs to get going. I had some. You could potentially have a stop right there at 1545. It's getting pretty close to being hit though. Next, chart 53, US dollar just continues moving up, and it looks like it's up tonight again. Here added some fibs. That has not helped gold. And looking at gold, chart 54, GOLD, again, continues lower. Like I said, this is the problem, this GDX-GLD ratio. The stocks have been strongly underperforming here, and you want to be long gold when it's outperforming, not when it's underperforming. The stocks lead, gold follows. And you can see on the ratio that has not been happening. Gold stocks have been leading down. Chart 55, silver, that's the monthly chart that I like. It's forming this big 4-year coil. Eventually it'll break this coil, but it could be a while. Chart 56, GDX weekly, flat for the week, but well off those highs. Remember, it sold off from the top of that coil about a month ago. It's approaching the lower portion of the coil. Chart 57, GDX 2-hour view or daily view. Again, we bounced off this little gap area, but look where price stalled at, right at the uptrend line there. That was an area to take profits. Again, it's still possible this could recover, but that's not a pretty candle. Chart 58, there's the 2-hour view. Got a little pop out of that rectangle, but made a lower high again. And here's your GDX-GLD ratio as well. All right, moving on to some other trade ideas. So Netflix, as you know, they reported last night. Had a big gap up today, so congrats to anyone who was long that. Chart 60, RVSN was a long idea of mine on Monday. This one had a fantastic trade. Even if you bought the gap up on Tuesday there in the low 3s, it rallied up to $9, guys. When you get a rally when something goes up 300% in a day, just take your damn profits. Don't be greedy. Chart 61, NVIDIA was a long idea of mine back in early January out of this coil, and it just continues going up. Like I said, just trail your stops up, or you can look at the KISS system, see where its current stop is at, and follow that. Chart 62, Microsoft, same deal, just continues nicely out of this coil. Been an easy trade, just trail those stops up, maybe even just below the 9 EMA there. Little divergence there in the RSI 5. It could be negated quite easily though. Chart 63, SMCI, really nice trade so far. Big volume. Take some profits if you haven't done so. Chart 64, BABA. The other day we commented that we thought some of these Chinese names looked lower risk. BABA had a really nice MACD divergence, nice pop the last couple of days, good volume. I'm already long some of it. Watch the downtrend line now as well. Chart 65, this is Southwest Airlines. I had this long last week on the newsletters. Gave a nice little pop out of there. Chart 66, Jets, that's the airline ETF. That was the other idea I gave. I said it looked like an obvious ABC pullback, and since then it's moved up. Chart 67, SNPS was the other long idea on Monday. It hit its supply zone. That was my target area today. That was an area to take some profits, guys. Chart 68, DPST, regional bank ETF, popped out of that channel. Chart 69, BLFS. It's been on the watch list as a coil. I actually own a little bit of this, but it's just chopping around here. Again, have a stop in place. This thing needs to get going if it's going to start moving. Make sure to have a stop. Chart 70, Hershey's. I showed this as a coil the other night. Never triggered, so this is still a valid setup whichever direction this trades. The upside for a long or a break of the coil, or the downside for a short. Chart 71, Lab. This is a long idea if it can clear 250. Chart 72, TSBX, one from Steve last night, kind of a nice base. Good volume on that Tuesday. This is one to watch for a long. Chart 73, BDTX, been on the watch list for a while, still in this channel, has not broken either way. Still on watch. Chart 74, AMPH, Steve put this out last night. Looks like an excellent short idea. On a break here, I would have a target down around this area. Obviously the 200-day moving average first, but your supply, your demand zone's down around in this zone in the upper 40s. Jumper 75, here's ExxonMobil that got out of order. So this is an energy stock. I had this long on Monday's newsletter. The trigger was 1 penny over that doji with an initial stop at that 95.77 low. Excellent trade since then. First target here is the 20 MA. Or again, if you think a better bottom or a swing bottom is in, you can just hold your position with your stop. Jumper 76, DESP. Here's a new setup. Nice volume today. We'll see if it can clear this area. Notice your moving average ribbons are squeezing, pinching. Jumper 77, the final chart, SFNC. So up into this supply zone, if we can clear this resistance at 20.55, you might have a nice pop. You can see the pop and volume today. So concern about the market too here, guys, is these are the only two new long setups I can really find. So very difficult to find any good objectional long setups. When you start seeing that, that tells you to be a little more cautious in the market. Like I said, we have divergences on the daily, divergences on some of those indicators like the McClellan oscillators, percentage of stocks above their 20-day moving averages. So there's some warning signs to be aware of, and the fact that a bunch of nice long setups are not showing up on this scanner is telling. All right, that'll do it. Enjoy the rest of your Wednesday evening, and I'll see you guys tomorrow. Take care.